Hey, everybody, Tom Gentile. Welcome to our very first live podcast. With me today is, as he is here most of the time, is Chris Johnson. Chris, good afternoon.
Tom, how are you doing today?
Good. The Thursday before Friday, end of the week podcast.
There you go.
So getting started. And this is, you and I have been doing podcasts. We haven't been doing them live, but we really don't cut them and then start over again. And, we run them from start to finish. So, I was just thinking, why don't we just put this thing live, at the same time every week so that we can get out here and kind of hash things out. This is kind of a confessional, if you will.
But you know what's going to happen? This will be the one where we make all the blooper reel stuff, right?
Absolutely. Yeah. So glad to have you guys with us on our very first live, and give you some quick house rules as we get going here. Obviously, all of you in here, if you've watched everything that we do, I have a disclaimer. The disclaimer is actually below now, and it's in the description, but I'm going to mention two quick things. Number one, stock options and crypto trading. We all know they have large potential rewards, but also large potential risk. And number two, Chris and I, we're not your money managers. We're not your professional investment advisors. We're not investment advisors. We're here to educate you on simply how it is that we navigate the markets and pick trades for ourselves. And so that's what we're going to do today. I really want to talk about, if we were to chunk everything down into like three things, I want to cover really kind of a market outlook, what happened today, what happened this week. And I'm going to let Chris talk about what happened today and this week. We'll talk about what's going on in July. And then I want to talk about fangs and memes. So I want to talk about the fang stocks and meme stocks, kind of where they are, where they're going. One group's going in one direction, the other group's going in another direction. I think you all know my stance on these, but we're going to talk about it again and how to make money in fangs and memes. Of course, we want to talk about your stocks. So there'll be a portion of this where those of you here with us live, we're going to have you pump in your stocks. And Chris is going to go through, and I'll do some as well. We're going to do some fast outlooks on what we see happening with your favorite stocks. And we're going to end the podcast talking about our shopping list going into the next week and into this month. So that's what we have going on. Guys, feel free to chat with us in the comment section, and we will get into that comment section every once in a while. We'll jump in. Hello, all of you. Good afternoon. There's Mike coming in from Venice. Colorado is in the house today. There's Oregon. I was in Oregon last week. I felt like I was standing on the sun, when we were there, 115, 120
right.
degrees.
You were there when it was blazing hot. I forgot about that.
It was crazy, Chris.
Yeah.
It was absolutely crazy. I could have picked any other day in the entire year, and I had to pick the couple of days, the 3 days that it was the hottest on record.
Yeah.
But that was my birthday week, and I wanted to just kind of unplug for a couple of days. I want to show you and everybody else something that, for the guy that apparently doesn't need anything. I don't say has everything, but the guy that doesn't need anything, take a look at what the missus got me here. I put it on the screen. So right behind you here is a portrait that has Leonardo DiCaprio from The Wolf of Wall Street. And it's signed. This is an authenticated signed photo. And I like this because although the movie was a bit rash, I like the quote that's up on top. And the quote that's up on top, you may not be able to read it, but I'll tell you what it says real quick. The only thing standing between you and your goal is the BS story you keep telling yourself as to why you can't achieve it. That's what I ended up getting as a nice 56th birthday present, among other things. But so it's going on the wall. It's going to go on the wall. I just stuck it here behind me so that I could have it propped up so everybody could see that. But great little birthday week. Other than the fact it was so hot last week, I enjoyed it. It's good to be back. Good to be kicking along here. So let's go ahead and get right into it, Chris. So how about I start?
By the way, I'm jealous. I am a little green and with envy. Just for the record, green with envy.
Yeah, and it's to Tom. And then there's a big scribbly,
that's awesome.
which is
That's awesome.
Leonardo DiCaprio's signature. How cool is that? All right, let's get out of that. That's not helping anybody here in this room. What is going to help you is hopefully what we're doing, that we're looking at today. Real quick, I'm not going to take a lot of time right here, but if you take a look and see S&P, I got a 20-day chart that we're looking at right now, and that 20-day chart shows, if you notice here, the lows that happened, which was the middle of June, where we were down around 414. The high that we saw was yesterday. It was Wednesday. We had a big drop down early this morning, but have since then been coming back. I noticed a lot of the talking heads have been saying this is an area to be a buyer, a discount, blah, blah, blah. And while that may be true, I'm looking at going into this month a little more short term than I normally would as a trader, because this chart right here, this is the money calendar, and this is the money calendar for July. Now, Chris, as you can see, we're at the 8th right now. Next week stays kind of green till we get to Friday the 16th. And then from there, we start getting a little lopsided. Bullish days, bearish days. The more orange this gets into the red. Red is an extremely bearish day. Yellow is kind of a 50-50 day. What this tells me overall is that the most popular stocks are starting to run into some headway. Now, is it a coincidence that this is happening during earnings season? I think not. But that's my outlook for equities. And if you were to really kind of go and look at everything else when you pile it all together, 20-day chart of bonds on the high side. Traders are moving into bonds and have been for the last couple of weeks, and moving out of equities. Cash, kind of the same thing. Cash has been bought up the last 20 days. That's what UUP shows us. Take a look at USO. Now, USO is very interesting because we talked about this Monday on our live stream on Monday, that I felt that USO was something that was going to be sold off because they were selling the news. The news is what? The OPEC deal, all right, or undeal. The OPEC that was supposed to make the markets move higher, but we saw an about face on Monday, and then yesterday it just caved in too. Today we're getting a little bit of a recovery, but we were looking at that 49, 48. In fact, I'm looking at 47 as an area of support, and actually took a bearish trade on it on Monday. So that's one. But we're looking at the other thing is that, that whole buy in February and sell in July, that time frame where the markets move higher between February to mid-July, that's coming to an end. And so we look at that, and just, all of that together tells me it's time for oil to take a little breather. That's why I went bearish. I only got a small couple weeks to look at on that one as we move forward. So that's USO. Gold, I want to take a look at gold, and then I'm going to turn it to you, Chris. So GLD opened at new highs for the week, but we're still below the highs for the month, which was 178. We're trading around 168. We're about 10 points off those highs. Gold is lower on the month, but it has made a little bit of a rebound here in the last week. Now, what do you say, Chris? You got any charts you want to share with us?
You know what? I've got one that I really do want to share, and I'll sidle up with you on the whole idea of earnings week getting started. One thing I find, and what you're looking at here is the IWM. That is the small cap Russell 2000. I find it even more interesting if you look at the smallest 1,000 in that, the micro caps, same chart. What you're looking at is a trading range for the last 3 or 4 months, right? At the same time that the S&P 500 and the NASDAQ 100 have been forging higher to new highs. You and I think, would be in line in thinking with this. One of the things I always subscribe to or prescribe to is the idea that the market's driven higher by risk appetite, not necessarily fundamentals. It is the risk appetite of somebody putting $1 on the table and wanting to take $1.10 away at some point. If the risk appetite goes away, then you have to think that you're dealing with a bit of a paper tiger when it comes to rallies. And we've had no risk appetite in this market for the last 3 months, Tom. Right. This has been a Fed-driven rally. And I don't want to come out there and say, oh, the Fed in the punch bowl, but it's what it is. And to some degree, I think we need to look at the tipping point that's happening with small caps right now. When I look at the IWM breaking down relative over the last 3 days, I think it's going to be lights out. It goes along with what you're saying. Earnings, though, weigh in with me on this. Is it not weird that the financials have not rallied by 8% in the last 2 weeks? Because they almost always rally into earnings season. Almost always.
Well, the big problem is the bond market's moving higher, interest rates are going lower, and that's going to have a negative effect on banks, brokers, and insurance companies.
Exactly. So if the banks always have that buy the rumor rally, which they almost always do, and they almost always have the sell the news, is this, and going back to the money calendar, it ties up perfectly because you can see the banks start to report next week and it carries over to the week over. Then you start getting more yellow and orange on the money calendar. This times up perfectly with a more unusually heavy sell the news period that we could see after those banks hit us with their earnings starting next week. Yes, no?
Absolutely. Yeah. So let's go ahead and let's move into our second segment here. And that's kind of looking at fangs and memes. So I want to do a little fangs memes, and then we want to analyze any stocks that are out there right now. So I see some comments out there. A couple of them are on Amazon. We're going to get to Amazon here in just a moment. So let me bring my screen back up again. And so I want to move forward, and let's start off looking at Facebook, because Facebook's really the one that I don't have a lot to talk about here. When you look at Facebook, it was, as of just a day or two ago, hitting new highs for the month. The low was 330 for the month. The high was just over 356. We dropped down to 346. That was a big drop.
Yeah.
To go from yesterday's high of 356 to today's low was 342 and change. That was a big drop. There was just, people were just piling out in the morning, piling out of tech. Tech was getting hit really hard. So, I mean, Chris, what was the news that you were hearing this morning that just made people want to just jump ship on everything Fang?
Well, I think it is. I mean, obviously, you're talking the difference between growth and value right now, interest rates, where they're going. I think the Fed yesterday with minutes not giving us any clarity. The clear as mud is what I come back to here. There is also that we are extended up to those new highs right now, Tom, and we've been riding this trend, which is almost a zero volatility rally in the FANG stocks, those largest in the QQQ. It's a zero volatility rally. And I think somebody's kind of rang the bell here on overbought, overvalued, and is the value play going to come back into play? And you get everybody running out of those at the same time. That vacuum noise starts to kick in here, right?
Yeah, I mean, I'm seeing it, and when I look at the chart here next to me, with Facebook, I mean, look what Facebook did. It had a nice rally from 330 up to 356. It gave half of that away by the low, because I got the Fibonacci charts up here, but it did bounce off that 50% 20-day support level, and we're back now above 348 or close to 348 as of now. But that's not the big news. The big news was that I look at was Apple, which finally had a breakout month. I mean, this thing had been sitting in the 120s for who knows how long, bumping back and forth. It never got back up to the highs it had at the beginning of the year. And all of a sudden, look at what happened. It had a fantastic mid-June to mid-July move. I mean, look at all the green on the candles that started on June 28th. I mean, it took me going away. I literally went away, and Apple decided, hey, Tom's gone. Let's go higher. And that's what ended up happening. We had 133 and took us all the way up to 144.57. We did have a pullback today, but we didn't even get anywhere near the 38% retracement for the month. And we're back up. I'm telling you, I like this one more than anything in FANG, with the exception of one stock. And that one stock is Amazon. Now, Amazon is just, I mean, look at this move. And it really started, you got to go back to last week. If you look at 7-2, heading into the holiday weekend, we jumped up. And if you take a look at the highs that happened in mid-June, okay, 3,500. And 3,500 had been a just, you know, I mean, yeah, we went to 3550 a couple months ago, but 3500 was just a ceiling, just couldn't be broken. And there was all this pent up demand. And look what ends up happening the following Tuesday. All right, this is Tuesday, Wednesday today. But I mean, just big explosion. Now, I want to talk about Amazon's vol explosion, and not just volume. All right, because if you come down here, you can see all the volume that came in the last 3 days. We haven't clipped 5 million shares a day until 3 days ago. We hit 6.5 million. That was Friday. All right. No, sorry, Tuesday. Yesterday we hit over 5 million. Today we're back in the kind of the range, but I mean, big breakout upside breakout with big volume. Here's the interesting thing that happened. You see this red line here, Chris?
Yep.
That's option implied volatility. Now, 99 times out of 100, when a stock goes up, the volatility goes down. Not this time. Now, I sold puts on Amazon because I love selling puts on stocks I want to own.
Right.
And I ended up taking ownership of some Amazon stock. This was a couple weeks ago, and it was down below 3,400. But I started selling puts again, and I like to sell the real cheap ones, the out of the money, because that's where I'll buy the stock at. So I was selling the 33.25s on Friday. And, you know, I was getting like 3.5 points for them. It doesn't sound like much, but I like getting paid to buy stock at at 10, you know, at 5% below its price. On Tuesday, when we had this big leap up, and we went from, I mean, we went from 3,500 close to 3,675. Chris, do you know that the options, those $3.50 options, I actually sold more up here and got 325 for them.
Because the balls popped.
Why we were going farther out of the money. Those options should have dropped, but there was so much pent up demand. People were buying calls because they wanted to jump on this train, and there were some traders buying puts because they thought it was going to go down just as fast as it went up.
Right.
And lo and behold, all this option action just made those option premiums jump even more. The statistical probability of this thing going lower by, and I'm talking about 1 week options. All my options expire tomorrow. And I loaded up on short puts. And of course, all those short puts are going to expire worthless. So for those of you asking, where is Amazon going? I mean, you know, even after today, when everything else is still kind of down, Amazon kicked it into high gear. It's positive again today. This is all based on two things. Number one, Jeff Bezos stepping aside.
Right.
And apparently investors like that because, you know, whether he's, you know, focused on whether, you know, there's concern around his involvement from his recent divorce, some stuff going on in his personal life, or whether it's that he's got too many eggs in different baskets, you know, from Blue Origin to Amazon to whatever else he's involved in. For some reason, investors like the move, putting a new person in charge that is just solely focused on Amazon.
Right.
That's number one. And I think the bigger news story is this: are they going to split the stock? Now, I love a rumor because a rumor is what's propelling this.
Right.
What I'm concerned about is if they do split the stock, I may not get these juicy puts to sell in the future. So I'm going to ride this stock as long as I can. And if they do split it, it's not going to be a 2-for-1. If they split this thing, this is going to be 4-for-1, 8-for-1, 10-for-1. It's going to be a big number that's going to push this stock down where the average investor can get into it. The thing is the average investor can get into it anyway. It's called fractionals. Everybody
exactly.
But you know, I just think that we're getting a big volatility rush in here. I want to take advantage of it because who knows how long it's going to last. So that's my thought on Amazon.
I love, if I can throw something in there, and you just mentioned it, the handing of the reins to the new CEO. If you've noticed the week before, and this thing did take off in June 9th, June 7th, somewhere around there, Amazon, from announcing that they want to go out and buy movie studios to deals with Box to what's happened with Jedi, Amazon has been very active on that changing of the business side for the last month, and it's revved up to this CEO change, and it's put him in a spot that I think, from a perspective of investors, is kind of that new guard. This is the way that the company is going to be. And I think that's part of the reason why you see people wanting to just load up more and more on Amazon. They're sending a signal that this could be a new company coming out. I mean, it's exciting. And I've not been excited, as you know, about Amazon in a long time.
You bring that up, and I want to mention this. Amazon could become a value play if this happens, because first thing that's going to happen is people are going to say, oh, they're breaking it up. They're possibly going to break it up. It could become a value play. But you know what? I got a even better value play I want to talk about. Before I do, let's pop the charts back up there. And let's look at what I like to call the lagger of the bunch, even though it's having a pretty good month, is Netflix. Netflix has been the lagger of the bunch because it was a stock in the 6s that came down into the 4s. It's now, hitting mid 5s. It's making a pullback. It's had a very impressive month. But this is one, unlike Facebook. When you think of Facebook, what's Facebook's main competitor in social media?
Twitter.
It's
it's
Facebook's
Twitter.
main competitors themselves. Instagram.
Yeah, it really isn't. There's not much out there.
No, but outside of their own world, are they a search engine? I don't think so. They kind of are in their own retrospect. But when you look at Facebook, really not a lot of competition. When you look at Apple does have some competition if you want to go in and look at the phones.
Yep.
Outside of the phones, they don't have a lot of competition. They're eating into other people's lunch. All right. Then you look at, and we're going to get to Google in a moment, but Netflix has competition. They went from being the competition to becoming the 800-pound gorilla in the world of entertainment, to now you've got all these, Hulu, you got Vudu, you've got all the networks, like NBC's come out with Peacock.
Yep.
Everybody's coming out with their own little premium services.
Disney,
Instead of selling Netflix all of their entertainment and getting a piece, they'd rather get a larger piece by offering it themselves. Disney, obviously the biggest one. And what's interesting about Disney is Disney's actually gone down. Disney's actually had kind of a bad month. Chris, do you have a chart of Disney up real quick?
I do. I just pulled it up. We're down 4% year to date, up 50% for the year. This thing is trending lower, though. You know what? That's comparing them to a Netflix or something like that's unfair, because it's like they're swimming with a brick tied around their ankle right now with all the theme parks that aren't getting business. So that's one thing. But you know what? While you got my chart up here, Tom, I just thought of something when you were saying about Netflix and the competitors. If you look at that chart of Netflix, and it's kind of gone nowhere. The stock's flat for the year. It's literally up or down 0.88%. It's down 1%, right? Look at this one.
What are we looking at now?
Tesla. Down.
Yeah, and you know what? Tesla was my last one to discuss, but I'm going to give it to you.
I hate that I cut you off. I'm sorry, buddy.
No.
Tesla is in the same bed as Netflix right now. They were the leader of the pack. They were the one that broke through and said, look at this. We've got it. Nobody else has got it. We've got the electric vehicle. We've got the production. We've got the battery. Netflix had the streaming, had everything. And now both of them are dealing with competitors. And on Tesla's side, it's Ford, GM, NIO. You can name them. They're all over the place.
Yeah.
What do you do with
biggest problem may be Bitcoin and Doge, because they're now accepting those as payments. They stated they had a bunch of it. Their last earnings report that all their profits were in Bitcoin. If they sold, great. If they didn't, they gave back half of that since the last quarter. So I'm with you there. Tesla's one that's kind of a lagger. But one of my favorite ones, I would say probably, it's not my favorite in terms of volatility, but it's definitely my favorite in terms of where we see this going, is Google. Google is another one where, first of all, what do they have as far as competition? Nobody. They used to be Yahoo a long time ago, but Yahoo really screwed the pooch. And unfortunately, they went into areas they didn't need to be in, while Google continued to expand search. And Google search, the things they've done, purchasing YouTube. YouTube now is the second largest search engine, only to Google. And it's gotten so big that now the Federal Trade Commission wants to break these guys up. And there's a good chance that Google could get broken up. Now, what have we learned about breakups in terms of history? Go back and look at what happened to the Rockefellers. Go back and look at what happened to big companies in history. And when the breakups happened there, was it Standard Oil? Standard Oil got broken up, and it got broken up and along with J.D. Rockefeller's other companies. And what ended up happening is, although he did not want them to break up in the beginning, what happened was then he had smaller companies, which all rose in value, and it actually ended up increasing his net worth as well as shareholders' net worth. I believe the same thing could happen to Google if they break up Google and YouTube and make them two separate companies. What's going to end up happening is I see a 25% minimum increase to the shareholders as a whole when you take the sum of all the parts.
Right.
You're the fundamental guy in this group. Tell me if I'm wrong.
No, I think you're absolutely right. The same could be argued for Amazon. If you tried to split them up, it's not going to slow them down. It's going to turn them into a leaner group of companies that are going to increase their value. I mean, the corporate break up is seen as this evil thing, and it's meant to, bring everybody back to some sort of parity in terms of competition, and it just doesn't happen a lot of the times that way. I just look at the Bells when they broke up AT&T. All of a sudden, you had the regional Bells that just took over and dominated. I'm with you on this one. I mean, if that were to happen, and there are all kinds of things out there. Facebook, you could split off Instagram. Maybe not with TikTok competing, but Instagram would go out and start ruling their area again.
You see the pattern, though, don't you, Chris? It's it's company gets too big, has to be broken up, goes into smaller companies, and then they grow. But then eventually somebody else, an outlier, comes out with a whole new way of doing business or making things better for the consumer. And then the cycle is now what used to be new becomes old. It goes out of favor. New comes in. I used to look at it this way. Anytime you're in a new town or a new neighborhood and the mall comes in and you get a shopping mall, big shopping mall,
right?
For that 10 years, that actual town starts to peak. Then as the weeds start growing through the pavement and the mall gets a little bit old, a whole economic cycle changes in that town. People start moving out because they can get top dollar, at the top of that peak for their houses. And then things start to lag. And then that town becomes old, but then a new town comes up and the whole cycle starts again.
Yeah.
And you see that in the stock market too. So let's get into memes.
Hold on a
memes
second,
are
Tom.
a big thing. A lot of people want to listen to what we're talking about with memes. So let's meme it up real quick, and I'm going to jump back into the screen.
Hey, can I make a funny comment here?
Please.
So what you just described exactly with the malls, and I'm just bringing this up because it's funny and I'm laughing on the inside. There's a town about 20 miles away from me that had one of the biggest malls in the country. Forest Fair. It was called the mall. I forget what it was. It was this big, huge mall in the 80s. It did exactly what you said. Guess who is running their operations out of it right now?
Who? Oh, Amazon.
Boom. They bought it because it's got the garage.
That was just a good guess.
So it's got the retail spaces. They've turned it into a distribution center. Amazon owns it now. You just nailed it. That was awesome.
And if you look at malls these days, they're becoming more service oriented more than ever before. And I'm seeing more and more stores leave. Like the mall that we go to, it has a Tesla in it. It has an Apple. I mean, your mall is not an anchor now without an Apple store. If you don't have an Apple store in your mall, it's not a mall. It's a strip mall.
Yeah, purple mattresses, all of that.
But I mean, Microsoft used to have a store there too, and it's gone. And it makes me think, okay, if the Microsoft store is pulling out, and Tesla, by the way, is eliminating all of their brick and mortar stuff within the next, I think they were phasing out in the next year or so, then does that mean that we're now, malls are kind of that's a tough one to say always and never, because the entire landscape of retail has changed. Mm-hmm. It's absolutely changed because we can get everything delivered to us now. Packages arrive at my house daily. I get, stuff's coming from Amazon. If it's not coming from Amazon, it's coming from Walmart, or it's coming from DoorDash, or it's coming from, we're all becoming hermits. is what's happening. But I'm just saying, just think of the cycles that what we're discussing and how they relate to the stock market.
Yeah, absolutely.
AMC is another such one of those cycles that I think is kind of cycled out. However, it's not going away without a fight. As you can see, this is the 1 month chart of AMC Entertainment. Low was at 42. The high hit above 64. And we've been rolling back down over the last week and a half or so. We've kind of dropped down. I've been, and those of you that are in this room, if you are have been hanging out with me on live streams or anything else that I do, I've been talking about selling premium in AMC ever since I went to go try to sell puts on AMC, and I couldn't. My broker wouldn't let me. So then I found out I could sell strangles. That's pretty risky. But I could sell credit spreads. I could sell bullish spreads. I could sell bearish spreads. I could sell both. It's called an iron condor. And I've been doing this kind of week in and week out for the last several weeks. And here we go. And I'm kind of in that 40, I think it's the 41.36 on the bottom. And I'm at the 55.60, I think, on the top. Expires tomorrow. I'm sitting right in the sweet spot right now. So I'm hoping everything closes up and becomes zero. And then I'll look at rinsing and repeating that. So we'll see what ends up happening there. But I mean, for the month, we see Fang has been in favor, Chris, and memes, as much as everybody wants to believe these are going to be the savior and the retirement fund for the Gen Y group. No, not going to happen. Not going to happen. It's too risky. You're better off being an option trader in these. And I'm not talking about buying. I'm talking about selling premium. You're better off selling premium. That's where the probabilities are with these meme stocks. AMC down for the month. Look at GameStop. GameStop, way down. 280, 180. I mean, you're getting a 1/3 haircut right there off of zero, literally in a month. Now, most of that came on the 10th. When you had that big drop down. I don't know if you remember what day that was. That was the day that two things happened. They announced earnings, but then they announced the CEO was leaving, a new one was coming in place, or CFO, right. Somebody at the top that was more. It was coming from e-commerce, and a lot of folks didn't like that, whether they were smart money, whether they were retail. Big sell-off on that day, and it just simply hasn't recovered. And this one's just kind of going out of style and going out of favor. Diamond hands, they call it. Boy,
what's the last play?
You better have some carbon. You better have some carbon fiber on those diamond hands, because this one's cutting.
What is deep. GameStop's swan song, so to speak? I mean, where does this thing go? Is there wanting to turn it around and turn it into another, game delivery or what? I mean, there's been so many stories about this, Tom. At what point do the memers, I guess they would be, just go, forget it. I can't do this anymore.
Yeah. I mean, Mo Media here on the screen. GameStop's worth $20 to $30. Will continue down. I don't disagree. I do think it's going to be a fight all the way down. I don't think it's just going to continue to go straight down. I think there's going to be, the memers are going to say, buy it up. It's going to be volatile, but I believe that I'm going to stay in that camp on the short side. How do you short a stock like this without getting your head handed to you if you're wrong? And that's where put spreads come into place. Anything bearish, a bearish spread, bearish call spreads, bearish put spreads, the ability to make money if the stock goes down, but not be open-ended in the event that you are wrong. All right. So that's one. Guys, want to hear from you. Want to see what you have. Now's a great time to start putting in your favorite stocks. We'll analyze them for the next 5 or 10 minutes here. While we're waiting for those to come in, let's take a look at a couple more. PetMed Express. So this is one that I was doing extremely well on, that I happened to get in before the memers. And my plan was, fundamentally, I actually kind of like it. It actually has a business plan to it, but it's been dropping and is down on its lows for the past month. And I'm going to be reevaluating this one. I have a small stock position on it. But it wasn't one that I jumped in because of memers. It was one that I jumped in because it was, kind of what I considered a stock that had good fundamentals. It had some security, and I own it in the 20s. So I'm still up on it, but I gave a lot back since that day. It went up 40%. It was somewhere just nearly a month ago. Coinbase.
How about
Let's end with
Chewy?
Coinbase here, Chris.
How about Chewy coming back here off the bottoms? And
You know what?
if you bring up
Chewy.
PetSmart
Yeah, we'll
Express,
look at Chewy. So Coinbase is a Bitcoin play. This one's gotten, it's been rattling back and forth a lot. It was down 5% yesterday and then went up 5%. It was down 5% again today, and now it's up on the day again. And it may be, it's still down. It's just down a lot less than it was because, here's your close of yesterday, top of the green candle. Here's your close, or right now where we're trading top of the green candle, completely, different between where we were yesterday and today, but it has made a bit of a move since then. All right. Chris, you ready to play Name That Stock?
Yeah, absolutely.
Right. So I'm going to put a stock on the screen with the person who's asking for it, and then you're going to evaluate it for us. So we're going to start. I'm going to do it right here where we started throwing this in. And guys, we're not going to be able to get to everybody. I can tell you that. But let's go ahead with James. James is asking about Booking Holdings, BKNG. So CJ, what do you think about BK?
You ready? BKNG, Booking, just like Travels, or just like anybody else in this sector. You had to buy the rumor, and now it is sell the news. Plus, it's sell the news compounded by the fact that we're seeing this new variant come out. I look at it breaking below the 200-day moving average at 2143 and think it's got further to go. And like I said, the travel people are already out there. Tom, I see maybe a 2,000 print on this stock here in the next 4 to 6 weeks. So if you're looking directionally, that's the way it goes here, I think.
In the next 4 weeks, we do have a money calendar. We do have a seasonal opportunity popping up on this one. So timing might be very interesting when the lows come in with the beginning of that, sometime, I think it's in the beginning of August, that it actually starts to show potential seasonality strength. So that's one that I wanted to bring up as well. James, thank you very much. Let's move to Veronica with AMD. And there's Veronica's picture. Hi, Veronica. So wow. Okay. Now this is completely different than Booking Holdings. I'll tell you that.
Oh yeah. So I'll throw my 2 cents in. You lob it on. You know what? AMD, the semiconductors, obviously, whether it's Taiwan Semi, Intel's failing here. This is a bifurcated sector when I look at it. AMD, Nvidia, those are the winners. Intel and some of the others are the losers. I love this pullback, Tom, because it's a healthy pullback and a healthy trend. $86 is a great buying point at the 20-day moving average, and then I think you see that volatility carry it back up towards 100.
The Gen Yers and Millennials love this one too, but they loved it a lot cheaper than they do now. Thank you, Veronica. Okay, let's go to Russell. He's asking about RIG, Transoceanic. So isn't that a cheap one?
It is. It's down at $4.50 a share right now, pulling down to its 20-day as well. This is one when I look at USO. How we heard about rig counts, no pun intended with the stock name, but Transocean obviously does that. Rig counts are going up as oil prices go up. So you look at fracking, you look at anything in the services. This stock, and I have to throw it out there. I've had a position in this stock and looking to open up a new one. So it is a leader in its group. The low price makes it attractive for everyone. 550 is where I look for this to go. Tremendous strength and volume over the last couple of weeks here. I like the stock.
Nice. And, the other thing too, I want to mention is RIG is one of those stocks where I'm not an option trader on a stock that's $4.50. If you like the stock, just own the stock. And again, Russell, appreciate that. Thank you very much. Let's take a look at Otto, who's asking about Sienna, CIEN.
Sienna Corp is one of those I put in my volatility hold pattern or my penalty box. I'll use that since the NHL finals stopped yesterday or were finished yesterday with the Tampa Bay Lightning winning. Congratulations, Tom. So
hey, we got 2 in this year. So we got we got the Super Bowl, we got the Stanley Cup, and now all we need is a World Series. And then these guys will be on the Sports Illustrated cover.
But you had the Stanley Cup last year too. So you got 2 cups in a row, a Super Bowl sandwiched in between. It's not fair. It is
It
fair.
is most definitely fair.
It is fair. This one's in the
All right.
volatility penalty box. I call this volatility with no direction. You can trade it. 61 bucks was the top. This is just too choppy for me, Tom. It's going to be a great one if you want to own it, sell puts on though, right? Because the volatility is going to give you some nice premiums.
All right, let's put two more on there. So I'm gonna just grab two more. CRM. Marilyn's asking about CRM.
Salesforce. This is that company that you think should be taken off through the roof, and it's not, especially since we're going back into pandemic mode. I do see here, and anybody that follows me knows I love it when that volatility shuts down with the Bollinger Bands, because it means you've got a volatility event coming. It's pending. I'm not sure when Salesforce announces earnings. I like this in terms of the volatility to carry it higher because that 20 and 50-day are moving higher. And look right there, a little bit of a golden cross forming on the 50-day going above the 20-day or 200.
I see it.
I like it. I think there are faster movers out there, but Salesforce.com looks good to the upside.
All right, and then you know what? Bring Chewy back up one more time. Mo's asking about Chewy, and I don't think we gave Chewy its fair plug.
So from a technical basis, I like it. It's a basing. This is like so many of those clean energy stocks that have based out here. I mean, let's face it. This is a pandemic stock that came back down and is starting to find its way. The company fundamentally had some great numbers. It's just it got too crowded.
They're finally starting to get to a profit. They're seeing light at the end of this tunnel.
They are.
I like it. My wife likes it. Our cats like it. You know, they were. I will say this: they were having supply issues, and the reason I know this is because cat food wasn't showing up at the house as fast as it used to, and it was the premium stuff. You know, my cats don't eat that. Friskies and well, I have an older cat that's the only thing that she'll eat because she doesn't like that tasteless food. Nor do I. But
well, you know what? You got to keep the cats happy, Tom.
Exactly. So. Yeah, but the smaller, the kittens, they'll pretty much eat anything you put in front of them. So we feed them the good stuff. But we get a lot of that from Chewies. Most of that comes from Chewies, and they still continue to be a company, even though they're now, what are they part of? They're part of it's one of the pet companies, Petco,
PetSmart. Yep.
PetSmart. Yeah, even though they're part of PetSmart, they still haven't lost their customer service, and that's what's really pushing them. And they're a model that a lot of companies could follow. And then finally, I'm going to end. I said, we wanted to give Chewies its proper plug. Let's finish up with plug because Linda is asking about plug power.
All right. So here's my confessional, Tom. We're not supposed to fall in love with stocks. We're just supposed to trade them. I love a lot of the clean energy stocks, including plug power, and the technicals are supporting me here. The 50 days rolling up into a bullish pattern. All we need is a break above that trio, which is right there, that 220 and that 50. This, mark my words, write it down. We're going to be talking more about clean energy at the end of the year, the same way we were talking about it in March. This is going to be the sector that I believe you're going to find a lot of technical people looking for technology going into when they want to get away from Google, Amazon, Facebook, et cetera, et cetera. So yeah, I do like plug power. Long-term position though. This is a long game stock. You have to play this one for a 6-month, 12-month, but look at the leaps for goodness sake. I mean, it's only $24. You don't really need a leap.
And so, here's a question that Bean's asking us, which is, and you probably could pull up a chart on this, but I'm throwing this out here. This is what happens when we're live, Chris.
Yep.
Stuff's going to be asked, and we're not going to be ready for it. But this is a good question. And Bean's asking, would like to know our opinions on the housing market and when it's going to pop. And so, I'm going to start, and maybe you could throw something up there that might support or not support the theory. But I kind of believe we have a little bit of a difference between what happened in 2005 and what's happening now. In 2005, literally anyone could get a stated loan. They could just say, I make $1 million a year, and they bought a house. And there were more second home and investment properties bought than ever before. That's what I believe led to what we saw, which was a housing crash or housing reset. I do believe that could happen, but I don't think we're going to see the kind of moves that we saw in the 2008, 2009 timeframe, because there's differences. Number one, there's a whole lot more liquidity in the markets now than there ever has been, right? Interest rates are low. The Fed does not want to raise rates. I think the only way the Fed raises rates is with hyperinflation, which might actually happen, but there seems to be a little bit of containment there. We saw like lumber prices were like sky high, and then they fell back to earth really quick. Now steel has been on the rise. That's been a big thing. So commodities have kind of been cyclical. That's something too. But here's a really interesting thing right now that I see, and that is that right now inventories are low, all right? But there's something that's going to open up the inventories a bit, and that is when they take off the moratorium on foreclosures.
Yes.
All right. So the banks have not been able to foreclose on folks that just haven't been paying, for some reason, one reason or another. It could be because, even though we're still at, what's the unemployment rate right now, Chris? Is it 6? Is it 5.9?
We're in the 5s right now.
Right.
Yeah.
But I mean, there's people that are in that 5s that were part of the 10, part of the 15, part of the 20 that have just either not got their job back, or they don't want a job right now because they're not getting what they could have gotten, which is kind of hard because, with the amount of money that's floating around out there, people are having trouble finding employees. But there's going to be some foreclosures that come back on the market. Now, is it going to be enough to balance out the demands? No, not at all. But it will cause a little bit of a short-term break. But to me, in order for the housing market to really burst out of a bubble, we have to see overspending in housing. And the problem is that people are not going out there. I mean, there's people going out and buying houses much higher than they normally would. But I like to call those people New Yorkers and Californians that are leaving New York and California, and they're used to overpaying. And so, I've got family that's in real estate. I know what I mean is I have a couple real estate brokers in the family. And the problems they're running into right now is new housing, especially in planned communities and planned developments, is almost non-existent. Commodities in general, when you look at houses, even out to the higher RVs, you're looking at 2 years before you can get something brand new in a lot of areas. So because of that 2-year lag, that's part of the reason why existing homes have gone up. Yep. You've got people leaving the cities. You got people that want a little more space. Every time you hear the narrative on mainstream media, which is COVID, we're in ABCD. We're at Delta now. Echo is going to be next. Foxtrot will be after that. We're going to have variants that are going to run out longer than hurricanes, and it's just going to happen. And the reason why I believe is that, do I think COVID's a bad thing? Of course I do. There are people that die of the flu too. But the thing is there's nothing else to be talked about on media. Trump's not around anymore. The media's still talking about him, whether you love him or hate him. But but the fact that he's not around, mainstream media is looking for something to talk about. And so when there's no news, there's COVID news. That's just, the media's got to continue to keep the lights on, and they're going to keep the lights on anyway. They seem to. And so
I got to throw something. You nailed it right out of the gate. The first 30 seconds there, the inventory, first of all, they extended the moratorium to July 31st, I think, on the last day, on June 30th, which was supposed to be the last day. And when I look at it, you made 2 great points, Tom. First of all is liquidity. There's your 10-year heading back down again. Fed's going to keep the stomp on that. The second thing is when you look at the people who are trying to buy houses, unlike 2009, I love the fact that you said this, unlike 2008, 2009, these are not people going out there and doing, their third mortgage where they're doing adjustables on top of fixed and financing at 125, 130%. These are people who are looking for their first house, or they're looking for an apartment. We need housing. So that's genuine demand.
Or they're buying cash. And like Karen says, I have it on the screen right now, BlackRock's buying up houses. BlackRock and other companies are going in. It's hard to even find if you find houses, if you go look at Zillow or Realtor.com or Trulia or any of these apps, you're going to see the average home out there is in hours and days, not weeks and months. And what you're not seeing is the private home sales that are happening, that people are just coming to I'm getting mail. Do you want to sell this house? Do you want to sell that house? I haven't gotten mail on the house I want to sell in New York, but maybe that's because people don't know that's coming. That's going to be listing soon. I'm a person that loves to sell when there are a bunch of buyers, and I just feel like I gotta sell something. Right. Our family trust owns real estate all over the country and the world. I'd like to take that New York house, and I like to flip that and put it into something that is a lot of land. But we have that too. But I like to be a guy that says, you know what? Do what I do as a trader. When everybody's a buyer, I need to be a seller and vice versa. And so that's just what I'm thinking here. But Karen, you brought up a great point. BlackRock and these guys are going out there and really putting really putting the screws to people that want to buy a house. Between them, the Californians that are used to overpaying for everything. Folks in Manhattan that got $10 million plus houses, $1 million homes, they're selling out of those, taking a small loss and going and overbidding. There was a guy in a community. I heard this just yesterday. So there's a community in our town in Sarasota, which is it's just full of anywhere from the house prices right now I think are in between 4 million, and the highest one right now is selling for about 11. This isn't even on the ocean. This is not even on a golf course, right? But this community, there's people. The last one that bought said, "I'm buying. I know I'm overpaying. I'm paying more than he wants the home insured." This is my insurance guys tell me. So the house is 4.5. He's getting it insured for $3 million. And when his insurance agent said, why? He goes, because it's not worth 4.5. I can't take this money with me when I die. So I'm buying what I want. And this is going to be my house, the rest of my life house.
Yep.
And so that's what and there's other people that are thinking about this. So, all right, we went off on that tangent a little too long. But guys, thank you all for the comments on this. And, I still have the third thing we want to get into. And that is, I want to get into our shopping list. So, as we're rounding up this hour, Chris, let's go ahead and let's talk about the shopping list, our stock shopping list. And so I want to start with you. So what do you see? Is there anything you like right now for the next even couple weeks?
Well, we just finished talking about home building. So let me nail that down, because I think the Fed and the minutes and all of that fits up for not a perfect storm, but it fits up for a good enough storm to get home builders going here again for the next push. And I was sitting around thinking about this, Tom, and do I want to buy the home builders? Do I want to buy Toll Brothers? Do I want to buy KB? And the answer is no, because they're spending more to build those houses. And when they spend more to build those houses, their margins go down. So I think they're going to get squeezed. So what's the next level? Think of it like an oil trade with the midstreams, the toll booth keepers. Lennox International, LII, is one that I like right here from the home builders. Trex, TREX, I can pull those up. These are charts that are giving materials to the home builders. They're bringing their prices up, passing it on to the builders. The builders are going to try to pass it on to the buyers. And at some point, they're going to get squeezed. I like Trex sitting here right at $100. Love round numbers. This is one that I think takes off for the next couple weeks. The other one I mentioned, LII, Lennox International. That would be another that is in the same sector. They continue to push higher. They're resilient because they can. And AOS is the last, if I had to give you three from the home builders, AO Smith. That is the other one that I'd be looking at right now. Outside of that, I think there are 3 ETFs that everybody needs to consider, and they've all heard me say this before. LIT, which is a lithium ETF, that is a 6 to 12 month play here because all those batteries going into those EVs and everything. And then that ICLN, that clean energy, man. Dirty energy is doing good, or old school. I think we decided we were going to call it old school energy, right? I think
that's right. So give me those tickers one more time, Chris.
So LIT, lit.
Mm-hmm.
ICLN, which is the iClean, and then TAN, which is the solar ETF. And the kicker on that one is, if you think about it, among the clean energy companies, solar's the most tangible here, Tom. Genco Solar popped 10% yesterday, and it's holding that. You've got a number of solar companies right now that are popping. It's because you and I can drive around, especially you in Florida, and see solar panels up on roofs and know that that's working. So I think solar becomes a leader in the clean energy movement.
Awesome. Okay, so let me flip forward, as I'm just throwing a couple of other things in here that I want to share with everybody. Mm-hmm. So I'm going to steal the screen from you.
Do it. Yep.
There we go. Got it. So first thing I want to talk about is cheap and expensive. So before I get to cheap and expensive, let's talk about Bitcoin. So I got Bitcoin here. I'm looking at it, and we're coming back down again. This is a little bit, you look at this and you're like, wow, this is a little bit nerve-wracking here. And I have, you see this back in February where we were on the rise from 30,000 up to 63. We dropped all the way down. We're going to, looks like we're going to hit, and might happen this weekend, we're going to hit that 30,423 mark again. Now, we have not closed below this yet. We've stabbed down a couple of times, but we haven't closed below 30,423. We closed below those levels, and I see immediately 28 is what I see on the horizon. But if you take an extension, you take a look at this extension right here, this Fibonacci extension. I'm going to throw a number out here, and this could be a number that it might, happen by the end of the year. It might be, November. We start getting into the end of 2021, and 17,500, 18,000. 20,000 is really an interesting number to me, because that was the highs back in 2017.
Wow.
Christmas of 2017, before we dropped from that 20,000 back down to 3,000. So it would not surprise me at all if we did make a run down to the $20,000 level. And I think that would be a great place where you'd shake the leaves, from the leverage leaves is what I want to call it, out of Bitcoin, et cetera. Ethereum, real quick, while we're talking about it, let's look at Ethereum. Ethereum actually is stronger, and it was actually making some really nice moves here, but it can't get above the 2244 level for too long. For me to really love Ethereum again, we got to get above and close above 2,600. 2,600 is the number I'm looking at here for ETH. And then finally, let's take a look at Doge, and then I'll talk about my stock list. So Doge, and Doge is now part of Coinbase, which any of you that are trading cryptocurrency probably know that by now. But in case you don't, Doge is part of the Coinbase group. Doesn't mean I'm going to rush out and buy it, because it looks like that's the wrong thing to do. In fact, if we take that 180-day chart and I bring that down to a 100-day chart on Doge, you can really kind of see everything that's happened with this, where it's gone from a nickel up to above 68 cents. And now we're down to 21. And all this looks like is just drop upon drop. And, this low down here was below 20. I see the 10 to 15 cent level on Doge. I say that and I think, okay, there goes everybody. Everyone's going to leave the room now. That's right. A Doge investor. I'm not emotional about this stuff, guys. I never have been. All right. If you want to be a consistently profitable trader, get the emotion out of trading. And if you're going to trade emotion, trade the other side of everybody else's emotion. So where's everybody's emotion right now? They're in meme stocks. What's meme stocks doing? Well, it's taking money away from the emotional trader. It's putting money into the hands of the calculated trader, the one that is a rules-based trader. which is what we talk about here on a regular basis. Let's talk about the cheap and expensive list, because that's what I love to look at. I like to see where is the emotion and where is no emotion. The emotion's in this list right here, the expensive IV list. All right. Virgin Galactic sitting up there at the top, SPCE. And then if I come down, I see, well, you know who's not on this list anymore? AMC. AMC is not on the list anymore because AMC has dropped in terms of implied volatility. Now, you might look at this and go, wait a minute, Tom, why is TLT on this list? TLT has a volatility of 15. Well, that's because TLT has jumped up off of its lows, and it's now becoming in its, when we look at these top 10s, these top 10s are based on not on what's the most expensive right now, but what is the most expensive in terms of where it is now versus where it has been. Okay. So, but if we want to look at most expensive, SPCE. All right. Here's SPCE, Virgin Galactic Holdings. Now, Virgin Galactic, and you take a look at this black line. This is this right here is the options for every option that is between a 7-day to expiration to 149 days. So we basically got everything in here except the leaps, all those near money options. And that line is a print of the time value, how much is being bid up on these options right now. So if I look at Virgin Galactic, and I'm looking at it right now, and I'm thinking, all right, now on the left-hand side is the stock price. On the right-hand side, this is the IV. This is the option traders bidding this stuff up. Look where it was last month, 100. All right, look where it is now. It's approaching 200 for the volatility. This is something that's interesting me right now, right? And again, live podcast. So now I'm looking at it. Now it's interesting me. Now I want to see what I can do. So I'm going to pop over to the option tables. I want to see what the options are doing. I mean, 1 day to expiration, if they have them, SPCE. If they don't, let's see what they offer. All right, so there is a 1-day option that expires tomorrow. There's also the 8-day options that expire on Friday, July 16th, and then all the ones that go out. And you've got options expiration dates that go all the way into 2022, 2023. I'm more interested in what's going on right now. Let's take a look at these two groups. The ones that expire tomorrow and the ones that expire next Friday. Now I'm going to pop on over, and I want to see 40%. I want to see options that are 40% above and below today's stock price. That's what we're doing. And there is a big grouping of them. Calls on the left, puts on the right. Now, this is the 1-day options. I'm going to go all the way to the point where we see the stock price, which I have it right now at 52.03. Look at these at-the-money calls. $2.54 with 1 day to expiration. Chris, help me out here. Let's do a little math. $2.54 on a $52 stock is somewhere north of 4%. So they're asking you to pay 4% of the stock price for a 1-day option. Isn't that something?
5%, right? 4
to 5%.
Yeah, 4.7 or 4.8. Yeah.
I mean, that's huge. That's huge. Yeah. Now, what about the puts? The 52 puts are $2.50. That means you're going to get paid 5% to hold that put for 1 day. Now, I think that's kind of risky because when I looked at that chart, go back and look at that chart. I mean, this thing started below $45 a share, and already it's at 52 just today. It could easily go back down there again tomorrow. But I tell you what I like. I like all of this support down here. How about you, Chris?
Absolutely.
Look at that support.
At 44, yeah.
That support is somewhere down there around the $44, $43 area.
Yep.
Now, I don't think I can get anything. I mean, let's go look and see. What are the 44s trading for? Let's go take a look here. 45s. The 45s are 23 cents. The 44s are 16 cents. Not going to sell a 16-cent option. But what about next Friday? What about the 43s for next Friday? What are they selling for? Wowza, $3.43. That's 7.5% at the 43 strike, Chris?
Mm-hmm.
All right. So maybe I sell that. Now, I'm just poking around here, guys. I'm not recommending anything to you. I'm coming up with ideas. All right. My idea is I could sell that put for $3.43. And as long as we stay above 39.50, 39.50 something, right?
Yep.
Yeah. As long as we're $3.43 as long as we take that and subtract it from 43, that should break even by next Friday. That's not bad. From where the stock is right now, that's a good 10, 20, 25% below today's stock price. Stock has to move 25% against you. Do we have earnings coming out anytime soon? These are the things I have to ask myself when I'm looking at these. What does the earnings look like? Can I even get, 32 days away. So it's not going to affect me next Friday. Something that we want to keep in mind. All right. So you want to play the meme game. This is not the channel. All right. There are other channels out there where people are looking at meme stocks and they're just, they're getting all excited and blowing balloons and all kinds of confetti comes down when it goes up. And, not much happens when it goes down. Very quiet. But if you want to play it like a consistently profitable trader, stay out of the blast zone. This is the blast zone right now. The blast zone for space, for Virgin, is about 43 on the low side and about 50, looks like 57 on the high side. And the way this stock is reacting to the upside, I don't know if I want to be shorting this. I don't want to be bearish, but let's be bullish out of the money. So, one way you can do it is selling puts. Another way you can do it is put spreads. So if we sold the 43 put and we came down here and we reinsured, maybe with the 40, all right, bought a 40. What's that going to do for us? Let's find out. So I'm going to come back up here to the top of the screen, and I'm going to click on risk graph, and I want to see what this could be done for. All right. So I could take in $110 credit on this trade right now, give or take a few dollars. You might have to give a little bit up to get this trade filled. But look what we're risking. We're risking 190. So let's say we take in 100 and we risk 200, Chris. Right. So for every dollar I make, I could lose $2. Now, if you and I were flipping coins, that would not be something I'd want to be doing. 50-50 chance that I make a dollar and lose a dollar. I'll go up to the Seminole Hard Rock Casino and I can get those kind of odds, and free drinks. I don't get free drinks here, but what do I get if I'm gonna risk 190 to make 110? Well, got a little probability chart down here that's going to help me, and that probability is going to tell me what we're looking at. I have a 77% statistical probability that I'm going to be right on this trade. So help me with the math here. And let's just dummy it down, Chris. So 3 out of 4 times I'm going to hit heads and I'm going to win. Right. I'm only going to win $1. 1 out of 4 times I'm going to hit tails. I'm going to lose $2.
Yep.
Does that strategy work in my favor time after time after time?
Absolutely.
Yes.
Flip that coin. Yep.
Exactly. I have a coin that comes up heads 3 times and hits tails 1 time.
Correct.
Ladies and gentlemen, if you want to learn how to trade consistently profitable, you got to start to understand some of this. This is the stuff that I know for some of you, it may not make a lot of sense. All right. The Wall Street Journal made no sense to me the first time I picked it up. You know why? Because I was used to reading stuff from left to right. I wasn't used to reading these little paragraphs were driving me crazy. I couldn't figure them out. And the only thing is I just had to learn a different way of reading. Didn't take long. Same thing goes with options. All right. And that's the thing. Okay. Now, David brought up a very interesting comment. Got to bring it up here. Branson is set to launch next week. So is the volatility maybe a bit high? My goodness. There's a risk I'd rather take with a put spread like this than selling puts. I'd rather take that 1 to 2 risk in the event that something goes wrong. What could go wrong? I mean, we already saw, the Challenger disaster. Nobody wants any of that to happen. And I'm sure these guys have quadruple checked everything to make sure it doesn't happen. So let's talk about what could go wrong that could hurt the stock without a disaster. How about a launch delay? How about a scrub? That doesn't hurt lives. But that could hurt the company. These are some things you have to think about when you put these trades on. And that could be exactly why, David, thank you very much, by the way, exactly why the volatility is so high. And you want to know how we can really find this out, Chris? If we go look at, I'm going to show you guys one more thing I want you to clue in on as we finish up this hour plus long podcast. So we're looking at options right here. So I'm going to bring the options down to, what I'm going to do is I'm going to bring the options down to 2%. All right. And I'm going to look at the July 16th options. And then I'm going to look at the July. Well, we could look at the 9th again, because the 9th does not include the ones that expire tomorrow, do not include Branson going to launch. So what we're looking for is implied volatilities that are completely different between this week and next week.
Right.
Next week's the event. This week's just the end of the week. So when I look at the at-the-money options, the calls and the puts, here you go. 236, 232. These are extremely high option volatilities. You see that, Chris?
Yep, I do.
Look at the put side. The put side, 231, 236. All right, so it's safe to say that the options that expire tomorrow are in the 230 range. Next week, look at this. Now, these should be lower in any stock. They're typically, option traders are procrastinators. They're always worried about today. They're not worried about next week. It's always, I got to do it now. And that typically causes IVs to be higher. But the one-time IVs will be higher farther out than they are now is if there is an event that is happening. The event for most stocks is earnings. The event for next week, as David so eloquently brought it up for us, is Branson heading to
space,
heading to the launch pad.
Yeah.
All right. So, Chris, final words.
You know what? I say this often when I do my streams, watch your butt. And this is, did
you say watch your butt?
This is a watch your butt market, Tom.
All right.
Watch your butt market. Little erosion going on. What's the one thing people should watch for the next couple of days, in your opinion?
Oh man. I think what's going to happen is I do think we're going to see new highs next week. I think people are going to get sucked into this. Oh, any pullback, I need to be buying it. And then, the other thing too, we got earnings that are kicking off next week. Earnings typically kick off strong in the beginning and then they get weaker as the earnings season goes on, especially Q2. So that's what I'm going to be looking at. I'm going to be looking for that strong first Alcoa bank stock movement. Although I don't think the bank stocks are going to report what everyone's expecting. And I think that's going to be the tip of the iceberg that could move this thing lower. So that's what I'm looking at.
All right. I'm watching the VIX.
Finally, I want to mention everything to something to the entire group. We're going to be doing live podcasts now every Thursday at 2 p.m. So see Chris and I live every week. The other thing I want to mention too, guys, is that if you have not done so, this really helps out our channel and makes me want to do these things more. And that is hitting that like button below this podcast right now. If you hit that like button, it helps support the channel, helps me want to come out and do more of these things because I just enjoy doing them. And so does Chris. Second thing I want to mention, too, is that we have a super chat, a way of doing super chat donations to the channel. If you do that, all of our proceeds, all of our profits from this YouTube channel go straight to charity. And we look at various charities as well, guys. So I talk about those charities. We do them about, toward the end of the month. We get an idea of what the channel ends up doing, and we end up donating that money to specified charities. So we actually donated last month to a charity called LBX Sports, which actually helps underprivileged youths that are in inner city. All right, helps get them into organized sports, which I think is a fantastic way of really diverting someone from going down the wrong path. I grew up in sports. I bet you did too, Chris.
Absolutely.
Organized sports, teamwork. I think sports really helps shape people. A lot of people, not everybody, but it helps shape people into who they want to become. And so we're excited to donate to that worthy cause. But you know what? We do that in part because of you folks. All right. So, you know, as you're watching our channel, as you're, you know, as you watch our videos and our live streams and our podcasts, you help support the channel. You're also helping support various charities that we donate to. So thank you all very much. I appreciate it. And by the way, Andrew, I appreciate the comment. I have it up here on the screen. You know, we do our best. We really do. You know, I like to, I came from, believe it or not, I came from a retail background. And, you know, a lot of people, when I was first starting in the markets and I was on the Florida American Stock Exchange, you know, I used to get that, you know, what are you doing here? You know, you don't belong here. And, you know, I just kind of laughed it off. I always thought the reason I didn't belong there is because I'm 5'6", 5'7", and the average floor trader was 6 feet. So I thought they were saying that because I was short and I couldn't see the front of the pit. And it was because I came from the retail background. And, you know, I thought, you know what, that's what I'm going to own that. I'm going to own that retail background and retail trader, because you know what else I learned from the retail background? That's a hard, I mean, to me, that's a hard business, a hard place to get started. But I learned a lot in the retail industry. And the number one thing I learned is that, you know, the customer's always right. And I'd like to take that philosophy and take it into the education business. And Chris is here because he has the same exact philosophy.
Absolutely.
Otherwise, he wouldn't be here.
No.
You know, so. Guys, thank you very much. Appreciate you being here. We got next week, I'll be on live with you at Monday. I'm going to do a part 2 to the video I did on fixing broken stocks because I had one of my subscribers here ask me a lot of good questions. And so I'm going to take his questions and we're going to talk about fixing broken stocks part 2 because he had some questions. I want to fill some voids that I may have caused in that video. But anyway, guys, thank you very much. Appreciate all the comments. And we'll see you again real soon. All right. Bye, everybody.